Hi, Michael Kolb, CFP with Evergreen Wealth Solutions, here with your February 2024 update. Well, the month of February was great for stocks. All three major US indices were up. The S&P 500 was up 5.3% for the month. The Dow Jones was up 2.5%, and the NASDAQ was up over 6.2%. This tech-heavy index had a lot of influence from this increased investor optimism about artificial intelligence affecting investments. But it wasn't just the tech-heavy companies that were doing really well. From a fundamental perspective, earnings growth has been phenomenal. With almost everybody completing their Q4 earnings, earnings grew by 7.9% for Q4 2023. That's an incredible growth rate in and of itself, but it's well above the expectations of 1.2% that analysts had for the quarter. They also were supported by incredible fundamentals, with all three major US indices completing the entire month above the 200-day moving average. And that's also great for a tailwind going into the rest of the year. The story was also similar with international markets, both the developed with MSCI EFA being up 1.8% and in emerging markets being up 4.75% as well. This was a little bit challenging for bonds as interest rates rose on the 10-year treasury throughout the month from about 4% to 4.25%. This put some pressure on bonds, particularly higher quality bonds, so the ag did fall about 1.4%. But from an economic standpoint, we had great news yet again. Job growth accelerated very impressively to over 350,000 jobs added in January, well above the expectations of 185, and the largest monthly increase in hiring in more than a year. So there's a lot of strength still in this labor market. But it's not just the labor market. Consumer income, consumer spending, personal income growth, all of these were above expectations in January, as well as business confidence. Manufacturing and service sectors both increased more than expected in January. So a great month, but they did have a little bit of effect on inflation, with inflation rising just a bit more than expected at a rise of 0.3 for the month of January. Looking towards the Fed, well, there was no meetings in February, but we did spend a lot of time digesting the Fed notes that came out from their meeting. And as we mentioned last time, the market was pricing in 6 rate cuts for 2024 going into that meeting, and the first of them happening maybe as early as March. Well, the Fed was saying they were only going to do 3, so we thought there was a bit of a disconnect there, and that really played out in the month of February, with markets digesting what the Fed was saying and all that was happening in terms of stronger than expected job growth and this higher inflation and investor optimism, and they kind of had to rethink what their expectations were for the Fed, which is what hurt the bond index, but they really ended the month coming in line with the Fed's expectation of only 3 cuts. So while this is a negative from a fixed income standpoint, it does actually add a positive development that could limit future volatility. So there are additional risks that could remain with the Fed. I mean, we have possible changes that could cause inflation spikes or a slowdown that could cause the Fed to need to cut quickly. But there's also federal elections coming up, and they've actually moved their meeting to be right after Election Day in November. So we think they're trying to stay out of it. But there's also elections coming up across the world with about half the world's population voting this year. There's the tensions in the Middle East and China and Ukraine, and all of these things haven't really affected the markets yet, but they could if something different happened. And as always, the biggest risk to portfolios is the unknown risk. So relatively solid growth from an economic standpoint, from a market standpoint, from a lot of the fundamentals remaining really, really positive. Strong earnings growth and business growth across the entire spectrum. So we do want to make sure we're highlighting that there are risks, but it's a really, really solid background. So what do you need? You need a diversified portfolio. You need to have a fixed income that can take advantage of situations. You need to have the equity that can take advantage of those situations. But most importantly, you need to have the portfolio that aligns with your goals, your timelines, and your needs. And that's what you need to make sure you talk with your Evergreen Wealth Solutions advisor about if you have any concerns, any questions, or anything keeping you up at night. Thank you and have a great day.